The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe with Ben Boulos and myself, Steve Sedgwick. These are your headlines. US Treasury Secretary Scott Bessent cracking down on Iran, threatening severe sanctions on anyone doing business with the regime and suggesting China won't be exempt.
We are going to hold everyone accountable, and this is economic asphyxiation of this regime.
Scott Bessent insists the Treasury will stick to its auction schedule even amid its buybacks. Germany's finance chief hitting the blame for the spike in global yields on the Iran war. Bitcoin passes $80,000 for the first time since mid-May, following a 20% rally last week, as renewed inflows into spot Bitcoin ETFs boost the cryptocurrency.
Very good morning to you. There is a rich history of sanctions against Iran. If you go on to Wikipedia or you go on to other sources as well, there is a huge page looking at various issues over various years, going back to the Iranian Revolution, going back to 1979. So the question is, good morning to you. What difference will more sanctions make now? Will they be very different sanctions? Will they be tighter sanctions on a global basis than we've seen previously? Because Iran has now vowed to respond with measures of its own after US Treasury Secretary Scott Bessent unveiled a plan to isolate Tehran's economy, threatening secondary sanctions on its enablers. The plan, dubbed Operation Economic Outcast, did not specify a date for Iran's trading partners to comply or which countries will be targeted. Dan joins us with more now. Dan, I just briefly said that sanctions have been around a very long time on Iran. Now the United States is saying there'll be some form of economic asphyxiation on Tehran, on Iran as well. That would require a global effort, or certainly global coercion, or certainly buy-in from global partners as well. How's this going to work?
Well, it's going to be very closely watched, Steve. Good morning to you. I think the announcement overnight was, of course, highly anticipated. Of course, post that really big piece that the Treasury Secretary put in the Financial Times yesterday. But while it was highly anticipated, it was kind of long on threats and short on detail. The Trump administration stepping up its campaign to cut Iran off from the global economy. It's threatening secondary sanctions against the countries, the banks and the companies that continue to do business with Tehran. And the Treasury Secretary Scott Bessent has called this Operation Economic Outcast, as you've just said, basically targeting everything from Iranian oil sales to digital asset networks. And the Treasury Secretary says foreign financial institutions could ultimately be cut off from the US dollar system if they don't comply. Here's the Treasury Secretary speaking earlier.
Those who stand with the United States will reap the rewards of our partnership. Those who tether themselves to the Iranian regime should expect to share in the isolation of a withering regime. Teams from Treasury, State, and the U.S. military are now meeting with their global counterparts to tell them that the United States expects action.
Scott Bessent speaking earlier. And while the US has sanctioned dozens of Iran-linked targets, the broader threat against major trading partners has not yet been fully implemented. Washington says individual countries will be given timelines to end their identified activities. In fact, the Treasury Secretary even said that President Trump will be picking up the phone to speak with world leaders about ensuring that they can get on side with what the US is trying to achieve here. And Bessent also singled out the UAE in particular as an early example, suggesting that its decision to cut trade trade with Iran followed US engagement and could be replicated elsewhere. Of course, the elephant in the room is really China. China remains the biggest test here for the administration. Beijing has rejected this US threat. Bessent still insisting that Chinese banks and companies will not be exempt. And then, of course, whether or not we will see any kind of movement inside China here to comply with what the US wants remains to be seen. Trump already using quite a lot of domestic political capital on this. How much more he has to use with President Xi ahead of that highly anticipated meeting remains to be seen. At the same time as well, Iran also dismissing this campaign. The parliamentary speaker Mohammad Ghalibaf saying no one believes the American bluster, he called it, and he also claimed that Iran's trading partners had said that they would ignore these warnings. It's a claim that CNBC has not independently verified, but the response from Iran in the last couple of hours has effectively been, look, we have seen this movie before and nothing changes on the ground. Iran's economy minister also weighing in. He says Tehran is prepared and is also warning that its response may not be purely defensive. Listen to this.
Naturally, they want to carry out an economic terrorist attack against us. We have our own tools as well. We know how to play the game too. This time they should no longer think that we will remain on the defensive and only defend ourselves. They should also expect an attack from our side. As I said, the unipolar world is over. As you saw, 2 of the world's major countries did not accept these new sanctions and this new plan and refused to go along with them. We are almost certain that many other countries, either officially or unofficially, will not accept them either, and God willing, they will fail.
Iran's economy minister there. And despite this new emphasis on economic pressure, the US Defense Secretary Pete Hegseth also said something interesting last night. He suggested that military strikes in the Strait of Hormuz or around Iran remain on the table here. That is despite this escalation in the economic rhetoric and the threats being leveled against America's allies if they do not comply with what the administration wants to achieve on the Iran file. So again, this is going to be very interesting to watch. The devil is in the detail. Markets seemingly trading through this though right now. We saw oil prices staying mostly muted through the course of the Asia session and flat as we track into the European Open as well.
Okay, excellent work. Thank you very much indeed for that, as ever, and thank you for explaining all of those details. Let's get to Sir Richard Dalton, who's former British ambassador to Iran. Sir, thank you very much indeed for joining us today. Look, in terms of what is different now, as opposed to previous sanctions efforts from the West and others to isolate Iran, what do you think the difference will be, Richard?
Additional bureaucratic resources and political determination in Washington and a wider range of target countries. Secondly, of course, a weaker Iran with its economy, its exchange rates, its oil sales, all in very deep difficulty. You've already identified the key points about how this is going to play out. But an additional detail, of course, is whether in the face of immiseration and even greater hardship, the Iranian people will remain quiet or will seek to overthrow their government in order to try and get a settlement with the United States.
Richard, that last point is absolutely pivotal. Do you think that actually there will be domestic uprisings again? We saw them at the start of the year. We have seen less since this conflict began, of course, as well. But actually, do you think there would be a credible opposition that could emerge from this?
I think it's unlikely. You can't rule out rats over bread, but in historical analogy, it tends to be when circumstances start to improve that major revolutions begin, rather when circumstances are at their lowest, when people are concentrating on their survival and that of their children. So it would be extremely difficult to foment an uprising from outside, as we saw in February this year with the failed Israeli and United States attempts to do just that. And of course, this level of aggression against the Iranian people is going to induce many people to say, well, it's a bad government, but we've got to work with it.
Richard, given the economic straits that Iran finds itself in, its oil exports collapsing, the real hitting a record low, inflation soaring, are you in touch with people there? And can you give us any sense of how it's playing out on the ground?
I've got very few contacts who are able to speak to somebody like me who's distrusted by the regime for his past diplomatic activities. What few contacts I have suggest to me that people are just hunkering down and hoping for better days.
Do you think there's any risk that actually this attempt to strangulate Iran with economic force could backfire and actually spark up a further military retaliation? For example, would the Iranian regime start attacking some of its neighbours in the region who comply with America's ultimatum?
Yes, that's possible. Of course, they would get hammered in return by those countries and by the United States. So they would certainly pause before doing that because they wish to retain their very considerable missile arsenals against further existential threats from the United States and Israel, although that doesn't look likely at the moment. It might transpire. But there's another factor, of course, which is how great is the United States' influence over Iran's trading partners? And that comes down to two things. First, do the governments that the United States will be addressing have full control over their trading communities? And the answer is no, particularly with the neighboring countries that ring Iran, where trade is very much in the hands of small operators who can use unofficial channels. And secondly, there's already a big movement to use alternative currencies or baskets of currencies for international transactions. We know that the proportion of world trade that is expressed in US dollars has declined recent years as a result of the United States' frequent use against Iran and other countries of its power in the dollar financial world to exclude certain nations and certain banks for political purposes. And that flight from using the dollar is surely going to increase with this very wide-scale campaign that the United States now is saying that it's going to conduct. So the impacts on the United States are not 100% positive in its conflict with Iran. There's some negatives for the United States too. And we may find that the United States writ is not as observed as Washington would like it to be.
Richard, if they called on you and said, look, as a former British ambassador to Iran, help us find a route out of this, what is the roadmap to achieve, if not full-on peace, at least a massive de-escalation? Can you see any path out of this all?
Well, yes. Theoretically, it's the June Memorandum of Understanding and sincere fulfillment by both sides of the commitments in there. That is still a valid basis. Some economic relief for Iran in return for an internationally accepted regime for managing the Straits of Hormuz and an eventual negotiation process to restore international monitoring of Iran's nuclear activities. It's easy to say that, but of course, distrust is total. Iran believes the United States sabotaged the June agreement by trying to evade the arrangements set up for the first 60 days under which Iran would manage the Straits of Hormuz. The United States did that by trying to set up the southern route closer to the Arabian shores of the Gulf. And of course, the United States believes that in the course of its negotiations, Iran has shown bad faith. So climbing out of that pit is very hard. It has to be done with the assistance of the regional mediators, but they've been extremely quiet of late. Their efforts have obviously failed, but their role is going to be crucial in future.
Yeah, Richard, and just very briefly at the end here, you talked about the regional players as well, the likes of Saudi, Turkey, Qatar, and others as well. clearly they want a resumption of normal trade flows and perhaps more normal rather than totally normal relations with Iran and of course with the US as well. Do you not think they need to play a bigger role in ending this conflict?
Well, they have in the background, but of course the United States doesn't always listen to Saudi Arabia and UAE and the other countries that want a negotiated outcome as soon as possible, nor does the United States listen to its allies and its many trading partners around the world, and least of all China, of course, who is saying very sensibly the right thing about sanctions being an unwieldy and uncertain tool and worsening the atmosphere, and political means being the right way to settle this conflict. The United States is set on determining that Iran will surrender. The historical precedent suggests that that's far-fetched and they're not going to achieve that. But maybe they are hoping that they will soften Iran's terms for an eventual negotiation. And maybe round about the year anniversary of the American-Israeli aggression next year, we'll see some progress towards talks.
Richard, thank you very much. Really good to get your thoughts and a great conversation this morning. Richard Dalton, former British ambassador to Iran. Stick around, still to come on the show. Investors look for any further detail on Scott Bessent's bond market intervention. We'll bring you the very latest. Plus, President Trump ramps up the pressure on Canada as the trade war with the US escalates. And we'll get a check on the health of the German economy with the president of IFO. Don't miss that conversation. It's at 9:15 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
So it is a big week for the markets, plenty for investors to digest, and Wall Street started the week on the back foot for the most part. The S&P 500, the Nasdaq Composite decisively closing in negative territory at the end of the Monday session. The Dow, the outperformer there, closing about 0.25% higher. The downward pull on the other indices came largely from chip, memory and other AI infrastructure stocks. We saw Nvidia have the seventh straight day of declines. Remember, we get Nvidia's latest results on Wednesday. Investors perhaps positioning ahead of that. Of course, you've still got the factors, the intensifying geopolitical tensions, the war with Iran, the trade war with Canada, also seeming to weigh on equities. We saw a little bit of relief in the oil price, down around about 2% on the day, and a bit of easing on the US Treasury yields as well. So that was the picture on Wall Street at the end of the Monday session. Let's cast an eye ahead and see what's being anticipated for today, and a slightly more positive calling for the futures there, pointing to an uptick on all of the three main benchmarks. I mentioned we've got Nvidia's results, big market moment on Wednesday. We've got the latest PCE inflation data on Wednesday as well. That's all, of course, tomorrow. And then markets looking ahead to Kevin Walsh's speech at Jackson Hole, the gathering there of central bank officials. So the other thing we've got today actually is some consumer confidence data. So plenty, as I say, for the markets to respond and react to. How is that all positioning things for the start of the trading day here in Europe? Well, another board of green to be found there. This after a day in which most of the European equity markets closed the session lower. The Pan-European Stock 600 ending Monday just the thinnest of whiskers above the flat line, but the key bourses, regional bourses, the DAX, the CAC, the MIB, all closing lower. The FTSE 100, the outperformer, yesterday, closing about 1/3% higher, but a stronger performance being called for Tuesday. Let's see if things pan out as we are now 40 minutes away from the European market open. And as things stand, this is the current picture on Asian equities. Slight improvement as the session has worn on. It's just the Hang Seng out of those four on the board at the moment that is in negative territory. The others improving. Of course, the same concerns we've mentioned affecting US and European markets playing out there, but seeming to shrug those off. Steve.
In the meantime, what a rally. Bitcoin has now crossed $80,000 mark for the first time since mid-May as renewed inflows into spot Bitcoin ETFs and improving risk appetite extended the cryptocurrency's recent rally. Bitcoin started tracking higher last week as it surged over 20% in 3 days for its biggest 3-day gain since 2023. Institutional demand has also returned, with ETFs attracting almost $2 billion in net inflows last week, their largest weekly haul since October. Shares of the Chinese electric vehicle maker XPeng are sliding 8.8% easier as we speak after the company issued a weaker than expected forecast for third quarter deliveries. Losses widened compared with a year ago to 1.4 billion yuan. XPeng also revealed its robotics business has secured a valuation of over $6 billion in its funding round.
Let's stay with that theme of robotics because a report from Bullhound Capital has said global labour shortages are driving unprecedented investment in robotics. It adds that the winners of the next phase of robotics won't be the companies that build the most advanced devices, but those that are able to get robots installed and running consistently. Irina Kerker is analyst at Bullhound Capital and joins us now. Irina, just explain, flesh that out a little in more detail. What does that look like, robots being installed and running consistently, and in which sectors?
So what that means is that what we want to see is not robots that do, flashy theatrical performances, that do backflips, that break dance, but robots that are actually useful in day-to-day setting or on the factory floor, that you can actually use reliably in a manufacturing line, boxing and unboxing, like for retailers. So something that will be useful and, more importantly, reliable. Something that will not hallucinate when put on the spot in an unfamiliar environment.
There'll be people watching this who may be thinking they've got either themselves or their family or their friends are in jobs that could feasibly be replaced by robotics. Is there the potential for human labour to be completely displaced in some instances?
I mean, robotics currently is not at a point where it can fully substitute a human. We've seen that across industries. It is currently still in a point where a lot of strides need to be made in order for it to be universally skilled in ways that a human would be. It is definitely true that it will change jobs and it will change the labor market in many ways. And that's the point where policymakers will have to step in. But I imagine the future will be more one of collaboration between humans and robots and just a shift in how we think of labor and skilled labor.
For as long as I've been working and covering business and finance, there has been talk of ageing populations in some countries and the impact that has on holding back economic growth. Could this be a solution to that, where if there is a labour shortage, these robots could step in and fill the void?
Definitely, and that is one of the key points we make in our report, that due to the labour shortages, like you said, aging populations, skilled labourers retiring, there is a structural demand for automation and physical AI. So even if there will be no further technological advancements in the field in the next few years, there will still be a drive for automation due to the reasons you just mentioned.
Irina, really fascinating, but are there really labour shortages or just people who don't want to work in manufacturing? Because I look at China, which is the place where we're seeing most advances in robotics, and one could argue the US as well, but let's just say China for the sake of this as well. Unemployment is now up to 5.2%, which is up from the most recent 5% figure in June. Youth unemployment, excluding students, it jumped to 17.9% due to a record influx of 12.7 million summer university graduates. Is there really labour shortages that's causing this, or is it the fact that robots don't take a salary, they don't take tea breaks, they don't take toilet breaks, they don't have sick days as well. I mean, they're much more useful for a lot of for companies rather than actual real live employees.
It's definitely a mix of things, and a very important niche for robotics will be jobs that are particularly dangerous for humans or particularly repetitive or tedious. So there will definitely be a point where robotics are also helping in these areas where humans might not prefer to do these jobs due to different reasons, but I think that will just then allow people to reskill or upskill into different fields or domains in which they might find more fulfillment.
Yeah, look, I've no doubt that things are moving very quickly. You talked about the backflips and the races and all that, and all the gimmicky stuff, but it does look extraordinary. But if we do see this kind of progress from a multitude of companies, and we can say Tesla's making its advances, Unitary, etc., what about the investment case? Because as I just read funny enough, with XPeng just before, as brilliant as EV technology is becoming and the reliability issues are being solved, the fact is it's a hard investment case at the moment due to the costs involved and due to the competitive pressure. What is the investment case for humanoid or even more widely robotics, given the competitive pressures?
So what we look at as investors, we look at companies that are solving the deployment problem, companies that are actually able to commercially deploy today and bring value to their customer. And many of the robots that you have mentioned that do backflips and show incredible feats of athleticism, most of them, about 70%, are actually just deployed to university labs or research centers for data harvesting. So they're not actually currently used commercially.
And who's leading the way? Because when we look at the agility and the extraordinary feats of robotics, like you were saying, the backflips and so on, it looks like China's leading the way. Is that the case when it comes to the more, I suppose, pedestrian robotics that humdrum that need to be applied in factories and the like? Is it China or is somewhere else leading?
So there's definitely different poles that are leading in different areas in robotics. China is in the lead when it comes to hardware and the supply chain. The US is doing incredible strides in the intelligence layer of robotics and physical AI. But I think Europe has a huge advantage at the manufacturing level because of the manufacturing base that it historically has, and also of the huge talent that it can tap into.
Hang on, Europe has an advantage?
I would say
I haven't heard those words with technology for a long time. Can you just say it one more time? Why have we got the advantage? Because of manufacturing base?
Yeah, I would say so, because Europe historically has a very strong manufacturing base, which brings a lot of potential for vertical integration of robotics. So you have a lot of manufacturing centers in Europe that can be automated.
Wow! I'm really happy, because I haven't heard anyone say Europe has an advantage over something in manufacturing for a long time. That's great to hear. Lovely place to leave this interview. Thank you. Irina Kierka, who is analyst at Bullhound Capital. Thank you very much indeed.